Hi, everyone. Welcome to Ovation CXM's webinar today on how banks can focus on customer experience and journey orchestration to drive more deposit dollars and revenue to their institutions. My name is Nasheen Khurshid-Shahi, and I'm the Director of Product Marketing for Ovation CXM. If you are not familiar with Ovation CXM, we are a fast-growing B2B SaaS company focused on customer experience management. Today, I'm joined by Ovation CXM's Head of Banking, Vaneet Grewal, who will introduce himself in a minute, and who is an expert in applying CX management to financial services. Before we begin, I want to level set about what we mean when we say customer experience management, because it is a very broad term that is overused in today's market. For Ovation CXM, our position is that the banking industry, among others, has become very complicated with an abundance of new partnerships that help drive innovation quickly and offer new feature sets. But with that growth in fintech financial services partnerships, the back office ecosystem has gotten extremely chaotic, and customers are starting to feel the chaos. For instance, there are multiple people, multiple teams, and multiple software platforms interacting with a single customer across a single journey every day. Because they are all dependent on one another, but not connected to one another, customers can be left feeling like they are dealing with many different companies instead of a single unified experience with their bank or credit union. We actually did some research in this in 2022 and discovered that 76% of business banking customers had abandoned onboarding a product right in the middle because the process became too confusing and too complicated. Their biggest stated frustration? Too many people and organizations were involved. Partnerships between financials and fintech partners are growing exponentially, so this problem will continue to grow. Our platform, CXM Engine, was created to solve this problem and to give all of the teams and partners the same shared view of a customer in real time to enable easier collaboration and communication before customers become frustrated and leave. Now that we've defined customer experience management for our conversation today, it's time to get started. Vaneet, I'm really happy to have you here, and I'd love to start with you. Can you tell us a little bit about yourself and your background in banking?
Thanks, Nasheen, and great to be here today, and welcome to all of our guests watching in and tuned in. My name is Vaneet Grewal. As Nasheen mentioned, I run the banking and financial services vertical here at Ovation CXM. And my background is one of a recovering software engineer within banking and capital markets. So I spent many years, decades in fact, building out software platforms in various lines of business across tier one US banks, and then also pivoted to product management and product development across platforms within large-scale capital markets organizations and commercial banking entities. For the past few years, I've moved over the fence to the enterprise software world, where I've been interfacing with banks, credit unions, community banks, and other financial services partners on a day-to-day basis, really getting a feel for the types of problems that they're experiencing within customer experience, within digital transformation efforts, and I've been helping and partnering with some of the leading brands here in the US and North America. Great to be here today. Looking forward to the session.
Likewise, Vaneet, with your background, I can't wait to ask you this question. As you know, it's interesting times today in banking. How do you feel it's affecting customer relationships?
Interesting times indeed. As we enter the summer of 2023, a lot's already happened this year. But let's just rewind before we focus on what's happened this year. I think some of the key themes that continue year on year within banking are just the ever-growing competition base and just the broad landscape of partners, new additions to the industry, and competitors that come to the market to wreak havoc in a positive way. And what I mean by that is really create products that challenge the status quo in banking, challenge the mindset of an end customer, challenge the mindset of incumbent banks. So take for example Apple's disruption recently in the savings account space, right? You wouldn't typically have thought of Apple being the institution that you would put your FDIC-backed savings in, and they've emerged as a force of nature in that space. And of course, the big tech organizations such as PayPal and Amazon and others, continue to add peripheral banking and financial services related capabilities without actually being a bank. And in fact, I think I read the other day that Jamie Dimon CEO of JP Morgan Chase, quoted that he felt that these organizations are banks because they take deposits, they lend money, so therefore they, meet the definition. Customer expectations continue to grow with that rise of big tech. So thinking about how big tech has influenced your personal consumer life, whether it be Uber, DoorDash, Airbnb, Amazon. Businesses are now, and commercial entities are now really starting to up level how they can piggyback off of that high expectation and that need to really drive next generation customer experiences. But if we move forward and just think about what's transcended this year, we've come off the back of a couple of years of high lending and high credit markets in the banking industry, and then completely pivoted this year given the regional banking crisis that kind of reared its head in the early part of Q1, which really led to a couple of key factors for customers. So firstly, it instilled the type of trust issues that we saw, in the 08-09 economic crisis. Really, banks failing to meet customers' expectations when it comes to trusting their financial institution. It could be an individual who's got their savings with a bank, or it could be a commercial organization or a small business that's leveraging banking capabilities to run their business effectively from a cash management standpoint, payments and credit card standpoint, et cetera, et cetera. So those trust issues kicked in. And what did we see? We saw a massive movement of deposit dollars around the banking industry that continues into the summer of 2023. We see customers willing to move for higher rates. We see customers willing to move for safety or perceived safety because there have been many a run on banks over the last few months. And so all of this, when you parlay it back and you think about it, relates to how a customer feels about their banking institution, the relationship that the customer has with their bank, the expectations, and the experiences that they have experienced and will continue to experience as they avail the goods and services of that particular bank. So it's really been a pretty big pivot this year from a heavy lending and credit focused industry to really kind of focus around deposit acquisitions right now.
That's a really good summary of, I think, everything that's happened over the past year. So given the trust issues, that pivot that you were mentioning, the rise in big tech, what, in your opinion, are the top priorities then for financial institutions when it comes to customer service specifically?
There's plenty of places to start, but I think you should start with your existing customers, given that they are, already through the door, as it were, and have some sort of relationship with the bank. Creating that stickiness of the relationship is imperative, right? And so how can you do that? First of all, you've got to drive everything that's required to retain the customer and the current customer's book of business, whether it be they hold deposit accounts with you, whether they process payments or cash management functions through your organization's financial services offerings, but really kind of increasing that stickiness is imperative. And then you kind of dovetail to opportunities to really grow share of wallet, right? And what do we mean by share of wallet? Well, in the consumer space, can you go from DDA accounts to loans to credit cards? In the commercial banking space, that is, how can you go from having a commercial company leverage you for, let's say, merchant payment services, and then taking them through a set of journeys that allows them to leverage you effectively for all of their banking needs, for their deposits, for their salary, for their cash management functions, for their accounts receivable functions, perhaps even their commercial credit cards and commercial lending needs. So when we say increasing greater share of wallet in the commercial banking space, we're really looking at opportunities to go from one unique relationship that you have with a commercial entity to offering the broad products that you offer across all of your commercial banking offering. And then it's really about ensuring that you can instill that trust and confidence in the brand, right? So Everybody's got brand and marketing around what they offer. Banks are typically referred to as the safest of institutions, the safest of enterprises, but we've just seen, a handful of banks that have been around for more than 100 years, in some cases, disappear or be acquired because of the run on banks. So really delivering on that brand promise is imperative. Ensuring that you can pivot and with agility move forward some of the transformation efforts that may have been underway that create better banking experiences for your customers, whether they be corporates, commercial, or retail customers. And all of these priorities really rely on a strong degree of focus around CX, customer experience, deepening of relationships, and really knowing your customer. And I know the old adage of KYC and knowing your customers are an overused term in the industry, but knowing your customer will become very, very important as you traverse different channels, as you traverse different products and segments of the bank that you can offer out to those customers. So those, in my opinion, are probably the top priorities for financial institutions right now.
I really like that you talked about stickiness and that expansion of the share of wallet. Do you feel that there's a disconnect between what customers view as a great experience and what financial institutions actually do? And if you do, can you just explain why you think that?
I do think there is a disjunct. Having just from my own personal perspective, I spent many years in banks off the back of the previous crisis in 08, 09. And our focus back then was to really make the internal functions of the bank optimized and efficient for ourselves, for the bank, right? Whether it be for the banker, for the back office department, whether it be, creating seamless business processes that reduce waste, right? Really with that lean, agile thinking. But unfortunately, that's not optimizing a customer's experience of the bank's goods and services. That is driving a myopic, really kind of focused, niche, siloed effort around efficiency. And so, I think where the disjunct exists is really how do you translate some of those micro processes, micro optimizations into the macro customer journey that you want to define and have your customer experience, and hopefully it's a good one that has them coming back again and again and again. So we've seen, historically we've seen focus on minutia and on individual touch points. Really what we're now observing, and the difference I think this time round will be that organizations are particularly some of the analysts out there in the field are making recommendations about looking at the holistic viewpoint of a customer. How does your customer move through the banking ecosystem with you, whether it be through distinct channels, branch, digital, hybrid, whether it be across different market segments, small business in restaurant is going to be very different to a corporate asset management experience with the same bank. And then how do you drive back that customer experience and control and drive up the satisfaction of a customer that may behave differently? So I think those are probably the biggest stark disjuncts that I see. And I'll just kind of close with this thought on this question, which is that we've seen organizations that get customer obsessed do really well, right? I mean, the number one customer obsessed organization in the world is Amazon, and they've now managed to convey that in all of their offerings. So the analysts feel strongly, and I believe Forrester and Gartner have been talking about this a lot, that banks that are going to become very customer focused and customer obsessed and design around their customer rather than around their internal processes and internal business lines are going to far outperform the ones that are not. So I think those are really the most important points with regards to kind of how you bring together the customer's view and what financial institutions are doing.
That makes a lot of sense. And as someone who was in banking and who talks to banks daily, designing around that internal process, I imagine, is quite a big challenge. What do they say to you about what these challenges are to designing around those internal processes to deliver consistently great CX?
The most common one is the silos that we've built up organizationally across people, processes, and data within banks. So an interaction with a customer may traverse multiple departments, multiple processes, and multiple sources of data. And that just makes it incredibly difficult to drive a cohesive customer experience, right? Right from, the manual, efforts that may be involved to data being stored in multiple systems of record, duplication, redundancy, not knowing what is the most authoritative piece of data about a customer, to be really comfortable sharing that back with a customer, either in a self-service way or through some sort of channel. So I think that's definitely number one. It's a tough nut to crack, and it's one that we've experienced a lot in the industry. The second one that's actually more of a side effect challenge, but it's an interesting one because we've now become, in the fintech partnership space, we've become very mature as an industry. Banks have embraced fintech partnerships to deliver expanded offerings where they couldn't necessarily, fire up a particular offering, or it didn't make sense for them to do that, but it made sense for them to partner with a fintech. However, as a side effect, the experiences have become disjointed, right? So you may have a partner that's delivering an accounts receivable capability or a billing capability to your customer. Are they doing it on brand? Do you have visibility into what they're doing? And can you present a united front to your customer? Unfortunately, more often than not, the answer is no. But the service is there. So you are getting AR and you are getting billing capabilities from this bank. It's just being provided by, X fintech firm. So bringing that complex ecosystem together is, one of the other challenges, which is not an easy one to solve. And I mentioned there that, that drives a visibility challenge into banks when they're providing their services to both, internal teams that need to respond to customers' inquiries, as well as just, driving full control to be able to solve customer experience problems. It could be a servicing issue, it could be an onboarding issue. Visibility is a big challenge. The other two that I kind of think about are around making sure that you have the right information at hand to be able to solve a problem for a customer, or even have the problem solved by the customer themselves, just being able to grant them the information to be able to do that themselves. Because who wants to pick up the phone? Who wants to fire off an email and wait until somebody responds to an email? I'd much rather help myself if I can. And so that knowledge is really, really difficult to acquire. And there's been, multiple attempts at, solving knowledge and contextual knowledge to customers and to customer-facing roles. And I think this is a really good inflection point where, now we've started to think about customer journeys. We understand where customers could be on their journey. We have context around what they're doing in terms of the interactions that they're having. So we can be very surgical about what knowledge we deliver and what articles or policies and procedures we deliver to the person who's going to solve a problem for a customer, or even the customer themselves. And then you've got the challenges that hamper us all in the banking industry. The legacy system burden that we continue to endure. Some of the hard-coded systems that exist, some of the obsolete platforms that are not very versatile, and unfortunately, we're not in a position in an industry, I don't think anybody is, where you can just blindly fund modernization efforts without ROI, right? So, replacing a system is no longer a program of work. There has to be a set of ROI around it. The ROI could be around improvement of customer experience. It could be satisfaction. It could be operating expense. It could be new products and services to drive customer retention. And by virtue of that, you would go and modernize the technology platforms that live beneath it.
That's a really great point, Vaneet, just thinking about that and extending that, what are some of the red flags or symptoms you would tell financial institutions to look for when trying to determine if they do actually have broken customer journeys?
Initially, you would look for points in your business where you suffer from attrition. And this is not just attrition of existing customers. This could be attrition in the sales funnel of your organization. So you've worked diligently to bring a prospect in who's potentially thinking of buying a product. You've got them through certain parts of the sales funnel and they fall off, right? So traditional sales funnel attrition is an area to definitely focus on. Onboarding a new account opening, right? You hear many a horror story of particularly commercial and small businesses becoming customers of banks and never actually executing a single transaction, or never ever having do they deposit funds into their DDA account because they get so frustrated in that onboarding a new account opening phase. So attrition exists right the way across the value chain, as it were. I think what's kind of dovetailing off of that, one of the other red flags is just how expensive it is to acquire new customers, right? So earlier on, I talked about, well, you should start with your existing customers. And of course, that's a great strategy. But you should also be continuing to think about how you bring new customers in. But if the cost to do that is so high, you're going to, you're kind of fighting an ROI storm there. And then you've got all of the kind of more scientific quantitative metrics, right? So we know that there are metrics around satisfaction that you can look at, CSAT scores, NPS scores. There are quantitative metrics around service that you can look at, first time resolution, mean time to resolution. And all of these can influence, how it is you're thinking about your customer's journey in the banking entity.
So in light of that, that response, which was very comprehensive, what would be the top tactics you would recommend to bankers to optimize their customers' experience, specifically with the intention to driving this deposit growth?
Starting with your existing customer base and thinking about how you would design for a referral journey is really powerful, right? So a relationship manager may have sold a lending relationship, like a real estate loan or something like that, and have a really established real estate lending relationship with a commercial company or a small business, or so on and so forth, but no other services are offered. And typically, when you look at banks, they're structured where they have a commercial lending team, they may have a commercial credit team, they may have a payments team, and their departments. Remember those silos we talked about? People, processes, and data. So really, kind of how do you facilitate the relationship that this commercial lender has in a way that you can kickstart a referral journey that will create hopefully a deposit relationship with that particular customer. Now you have to have the products to back it up. So you have to have the lucrative products, the interest rates that particular person would be looking for. But if they're already banking somewhere else for their deposits and they're banking somewhere else for their payments and they're using you for commercial lending, it would be a lot simpler for them to move. They would be incentivized to move over if you could create a compelling product set offering and a pathway in terms of a referral journey that doesn't introduce friction, because nobody, like I said earlier on, there's so much fall off in that new account opening and new onboarding phase. So we don't want that to occur and to alienate the existing relationship. So lowering the barrier of entry for those those new account creation processes, client onboarding, optimization, those I think are the key tactics to really kind of drive deposit growth. In addition to the products that the banks are offering, which need to be lucrative and attractive.